Assalamualaikum and hi to our lecturer, Madam Siti Hannisa. We are from 4H and my name is Syarafana Binti Samsuri.
My name is Siti Aisyah Binti.
My name is Siti Nursyakilla Binti Bakri.
My name is Siti Hannisa Binti Md Arif.
So we are going to present about Mfrs 141 Accounting for Agriculture. We have choose two companies which is in Malaysia and Singapore. For Malaysia, we have choose IOI Group, and for Singapore, we have choose First Resources Limited. So we move on to the first company. Shakila and I will be presenting annual report from First Resources Limited that is located outside from Malaysia, which is Singapore. For company's background, First Resources Limited was established in 1992 and incorporated on 9 December 2004. They are also listed on the Singapore Exchange since 2007. First Resources is one of the leading palm oil producers in the region that managing over 200,000 hectares of oil palm plantations in Riau, East Kalimantan, and West Kalimantan provinces of Indonesia. Their sustainability strategy is centered upon maximizing output while minimizing adverse environmental and social impact from its operation. The main core business activities is cultivating oil palm, harvesting the fresh fruit bunches, milling to crude palm oil, and palm kernel.
Okay, let's move on to the business flow chart of the company. First, they are going to nursery cultivations. The seeds are cultivated in a pre-nursery before they are transferred open field nursery. Second, field planting. Seedlings in the best conditions are transferred to the estate and are classified as immature palms. Third, upkeep. For the first 3 years, immature palms undergo an intensive upkeep program which involves fertilizations and weeding. Fourth, harvesting. It begins only when an appropriate number of fruitlets start detaching from the FFB, indicate optimal ripeness. Fifth, milling. Harvesting FFB are transported to mills within a tight 24 hours window for milling. The second last, processing. Through refining, biodiesels and kernel crushing plants, the CPO and PK are processed into high-value palm-based products. And then lastly, sales to customer. The company sold to both local and international market. Product offer are crude palm oil, refined palm oil products, biodiesels, and palm kernel products.
For plantation age profile, they have 4 average categories, which is first 7% of immature plantation that is around 0 to 3 years that takes up 14,689 hectares. Second, they have 26% of young plantation that is around 4 to 7 years that takes up 54,459 hectares. Third, they have 42% of prime plantation, which is around 8 to 17 years that takes up around 90,297 hectares. And fourth, they have 25% of old plantation that is 18 years and above and takes up around 52,628 hectares. That will total up to 212,073 hectares for the plantation. Next, for biological assets, is relate to the agriculture produce growing on barrel plants, referred to as fresh fruit bunches, and are stated at fair value less cost to sell. As in for gain or losses arising from the changes in fair value less estimated cost to sell of FFB at each reporting date are included in profit or loss for the period in which they arise. The fair value of biological assets is estimated by reference to the projected harvest quantities and market price of FFB as at the balance sheet date net of harvesting costs and estimated cost to sell. As in fair value of biological assets, to determine the fair value of biological assets, the income approach, which is level 3 fair value measurements, has been adopted by the group as being the most appropriate valuation technique. Under the income approach, the expected cash flow from the agricultural produce on the barrel plants are estimated based on the projected harvest quantity and the market price of FFB, net of harvesting costs and estimated cost to sell. The price of the FFB is largely dependent on the prevailing market prices of crude palm oil and palm kernel. Significant changes in fair value measurements from period to period are evaluated by management for reasonableness.
Okay, next, berry plants. Berry plants primarily comprise of oil palm plantations. It is measured at accumulated costs before maturity, less any subsequent accumulated depreciations and impairment loss after maturity. Upon maturity, berry plants are depreciated on a straight-line basis over the estimated useful life of 20 years. The carrying value of the berry plants are reviewed for impairment when events or changes in circumstances indicate that the carrying value not be recoverable. The residual value, useful life and depreciation method are reviewed at the HR reporting date and adjusted prospectively if appropriate. Next, berry plants are derecognized upon disposal or when no future economic benefit are expected from its use or disposal. Any gain or loss of the recognition of the berry plants is included in the profit or loss in the year the asset is derecognized. Cultivations of seedlings is still at cost. The accumulated cost will be reclassified to immature plantation at the time of planting. Berry plants also include land preparation costs, which is the cost incurred to clear the land and to ensure that the plantations are in a state ready for the plantation of seedlings. Next is basis of preparations of the First Resource Limited. The consolidated financial statement, balance sheets, and statement of changes in equity of the company has been prepared in accordance to the Singapore Financial Reporting Standard, which is SFRS. The financial statement has been prepared on the historical cost basis, except as disclosure in the accounting policy below. The financial statements are presented in US dollar, and all the values are rounded to the nearest thousand.
For operational highlights, below are the tables that I have made the summarization. First one is oil palm plantation area. The total planted area in 2018 is 210,885, while for 2019 it is 212,073. For the production volume, total fresh fruit bunches for 2008 is 3,435,159, while for 2019, 3,362,364. For the productivity, FFB refer to fresh fruit bunches. Yield per mature hectare is 18.0 in 2018 and 17.0 for 2019. CPO yield per mature hectares for 2018 is 4.1 and 2019 is 3.9, while for CPO extraction rate is 22.9% in 2018 and 23.1% in 2019. The PK extraction rate is 5.2% for 2018 and 5.3% for 2019. CPO is referred to crude palm oil, while PK is referred to palm kernel. As you can see, even though the mature hectares is decreasing in 2018 and 2019, the extraction rate is increasing. This shows that the extraction is successful.
Okay, as we can see in the consolidated income statement, the sales of the company declined from 2018 to 2019. The group derived revenue from the transfer of goods at a point in time for the following product, which is crude palm oil, palm kernel, fresh fruit bunches, and proceed palm-based product. Not like sales of the company, the cost of sales of the company are increase from 2018 to 2019. The costs that are incurred are cost of inventory recognized as expenses, depreciation of various plants and PPE, net employee benefit expenses relating to defined benefit plans, and plantation, milling, and processing costs.
Move on to the balance sheet. As you can see, barren plants are classified under non-current asset because it is a long-term asset. So for the notes to the account for barren plants stated that barren plants primarily comprise of oil palm plantation. As you can see, the cost at 1st January in 2019 is 795,752, while in 2018, 827,357. They also made an additional plantation, which is in 2019, 17,301, lesser than 2018, which is 34,728. Move on to the accumulated depreciation. In 2019 is 182,752, while for 2018 is 167,000 859. That will be the net carrying amount for 2019 is 595,558, while for 2018 is 613,020.
Okay, for the biological asset, it is recorded in the current asset account, which is increased from 2018 to 2019. As we can see in the note 22, the biological asset related to agricultural produce growing on berry plants, which is referred to as FFB, with the following movement and carrying value. So we can see at the 1st January, it is $17,183 plus a gain arising from changes in the fair value of biological asset and exchange differences. So at the 31st December 2019, it will be $25,952 USD.
Now that we are in consolidated cash flow statement, as you can see, the depreciation of various plants and property, plant and equipment in 2019 is 68,755, while for 2018 we have 65,138. Loss on disposal of various plants and property, plant and equipment is 2,198 for 2019, and for 2018 is 619. Lastly, the gain or loss arising from changes in fair value of biological asset is 2019. They gained around 7,913 and they lost around 3,456 in 2018.
We also can see they also record the capital expenditure on various plant of the company at the cash flow from investing activities.
So I will present about the annual report of IUI Group, which is in 2019. So next, the business flow chart for IUI Group. First is breeding, which is in breeding session, we got the plant breeding, tissue culture, seed production, and nursery. Next is cultivation, which is the circular economy. In cultivation, is included oil palm plantation, biomass recycle. Example is EFB, which is empty fruit bunches, fronds, and trunks. Next is extraction. Under extraction is FFB, which is fresh fruit bunches, CPO, crude palm oil mills, EFB, and kernel shell, and also POM, which is palm oil mill effluent. So next is the age profile. It showing the statistic for the plantation for IUI group. So the first one is crop mix for the group, which is we got the oil palm, rubber, and others. Which is in the oil palm we got 99.3%, and rubber 0.3%, and others is 0.4%. Next is which is the oil palm hectareage by age. In group, we got immature, young, prime, and past prime. And the total oil palm planted area is 176,156 hectares. So the third one is the oil palm heritage by age in Malaysia. So we got the same also, which is immature, young, prime, and past prime. It is the types of the plants. So the total oil palms planted area is 156,957 hectares. So approximately 46% or 81,708 hectares of the IUI group total oil palm planted area of 1,076 and 156 hectares comprise young and prime plants, while 38%, which is 66,287 hectares, consist of past prime palms that are above 21 years of age. So these palms will be replanted progressively with new planting methods under the replanting program. So the biological asset. The biological assets of the group, which is IOI group, comprise fresh fruit bunches. They are also known as FFB prior to harvest. And the valuation model that IOI group adopted considers the present value of the net cash flows expected to be generated from the sale of FFB, which is the fresh fruit bunches. And the cost to sell include the harvesting cost, transport, and windfall profit levy. So the inventories are stated at the lower of cost and net realizable value. And the cost is determined on a weighted average basis. And the cost comprises the original cost of purchase plus the cost of bringing the inventories to their intended location and condition. So this is the explanation for the inventories that I found on the notes to the account. So we will see it on the statement that we will present in disclosure part, which is more detailed for the inventories. So this is just the explanation. So the net realizable value is the estimated selling price in the ordinary course of business less the estimated cost of completion and selling expenses.
Okay, so the fair value measurement of II group biological assets are categorized within level 3 of fair value hierarchy. The fair value measurement are thus derived input from asset and liability that are not based on observable market data or that called unobservable input. The fair value measurement in level 3 also is based on the discounted price to book ratio for comparable public companies in industry or size. In the financial statement also stated there were also no transfer between all three levels of the fair value hierarchy during the financial year. Next, I want to talk about the beer plants. In IOI group companies, beer plants are defined as living plants that are used in production or supply of agriculture produce for more than one period and have remote likelihood of being sold as agriculture produce except for incidental scrap sales. The beer plants was measured at cost less accumulated depreciation and accumulated impairment loss. The costs include plantation expenditure, which represent the total cost incurred from land clearing to the point of harvesting. The beer plants also have average life cycle of 25 years, with the first 3 years as immature beer plants and the remaining years as mature beer plants. The mature beer plants are depreciated over the remaining useful life of 22 years on a straight line basis, while the immature beer plants are not depreciated until such time when they are available to use. Next, I want to talk about the basis of preparation of financial statement. The financial statement of the group and the company of IOI have been prepared in accordance with Malaysian Financial Reporting Standard (MFRS), International Financial Reporting Standard (IFRS), and the Provision of Company Act 2016 in Malaysia. The financial statement of the group and the company have been prepared under the historical cost convention except as otherwise stated in the financial statement. The financial statements are presented in Ringgit Malaysia, which is also the company's functional currency, and all financial information presented in RM is rounded to the nearest million except where otherwise stated.
So this is the operational highlights, which is we can see in the slide the plantation performance for IOI's group in 2018 and 2019. So we can see the difference amount that IOI had achieved in 2019 and a little bit difference than the 2018 that they had achieved in past 2 years. So this is the statements of profit or loss for IOI Group for the financial year ended 30 June 2019. So I had highlight the revenue part in the profit or loss for the company. and the arrow is showing the cost that had capitalized for the revenue, which is the revenue from contracts with customers, sales of plantation produce and related products, resources-based manufacturing, total sales of resource-based manufacturing, less sales to discontinued operations. So they are a part of the revenue in the profit or loss that companies had recognized.
In the statement of financial position, the bureau plans are considered as property, plant and equipment, while the raw material and consumable that is biological asset are recognized as inventories. In the statement of cash flow, there is net loss arising from changes in fair value of biological asset. In this statement, biological assets are considered as inventories. This is because fresh fruit bunches, that is FFB, is the agriculture produce after point of harvest that are processed subsequently. Under Mfrs 141, agriculture produce after point of harvest that are processed subsequently are not considered as biological assets.
So, this is the differences and similarities between IOI Group and the First Resources Limited. For the first difference, which is standard. IOI Group are using Malaysian Financial Reporting Standard, International Financial Reporting Standard, and the provisions of the Company Act 2016 in Malaysia. While in the First Resources Limited, they are using Singapore Financial Reporting Standard, which is SFRS.
For the second difference is II group use measurement for bureau plans is measured at cost less accumulated depreciation and accumulated impairment loss. While the First Resource Limited, for the bureau plans, they use accumulated cost and at cost less any subsequent accumulated depreciation and impairment loss. For the biological asset, II group use income approach. And the First Resource Limited also using income approach that is level 3 fair value measurement.
Okay, for the method, this is the similarities. For IOI group, it is depreciated over their remaining useful life of 22 years on a straight line basis, while for First Resources Limited, the residual value, useful life and depreciation using straight line basis over estimated useful life of 20 years method.
Okay, next, the similarities between IOI Group and the First Resource Limited, which is the physical and price change. Physical change, both IOI Group and First Resource Limited is measured the first 3 years as immature bearer plans. After 3 years, considered as mature bearer plans. While for the price change, the price of the FFB is largely dependent on the prevailing market price of crude, palm oil and palm kernel.
Okay, madam, that's all from us. Thank you.
Thank you.